This is Fintech Bot Focused, where we discuss, dissect, and implement all things automated trading. If you're into AI tools, trading bots, and fintech innovations, make sure you subscribe. The Forex market never sleeps, operating continuously from Monday to Friday. Unlike traditional stock exchanges, this relentless pace presents both opportunities and challenges for traders. Automated Forex systems powered by sophisticated algorithms have become indispensable in navigating this complex landscape. These systems execute trades based on predefined rules, eliminating the need for constant human oversight. They can react to market changes in fractions of a second, a speed unattainable by human traders. However, this automation also raises questions about market stability and the potential for errors. At the heart of automated Forex systems are algorithms that follow specific instructions to manage trades. These algorithms can range from simple triggers based on technical indicators to complex models incorporating multiple data points. The systems continuously scan price feeds, comparing conditions against their rules to execute trades automatically. This process eliminates human emotion and bias, allowing for consistent decision-making. However, the reliance on technology means that speed, stability, and connectivity are crucial. Even minor delays can impact trade outcomes, necessitating robust infrastructure like virtual private servers and low-latency connections. The flash crash of 2010 is a stark reminder of the potential pitfalls of automated trading. On May 6, the Dow Jones Industrial Average plummeted nearly 1,000 points in minutes, partly due to high-frequency trading algorithms acting on erroneous signals. Similarly, Knight Capital's 2012 debacle, where a faulty algorithm led to a $440 million loss in just 45 minutes, underscores the risks of automation without adequate safeguards. These incidents highlight the importance of rigorous testing and monitoring of automated systems. While automation offers speed and efficiency, it also demands vigilance to prevent catastrophic errors. These real-world examples illustrate the double-edged nature of automated trading, where the same technology that offers advantages can also amplify risks. For those considering automated Forex systems, several steps can enhance your trading strategy. First, ensure your system is thoroughly backtested using historical data to validate its performance. This step helps identify potential weaknesses and optimize parameters. Next, use a demo account to simulate live trading conditions without financial risk. This practice allows you to refine your approach and build confidence. Additionally, stay informed about market conditions and news events that could impact your trades. While automation handles execution, human oversight remains crucial for strategic adjustments. The most important lesson from the rise of automated Forex systems is the balance between technology and human oversight. While algorithms can execute trades with speed and precision, they lack the intuition and adaptability of human traders. Therefore, a hybrid approach that combines automated systems with human insight can offer the best of both worlds. As you navigate the Forex market, remember that technology is a tool, not a replacement for strategic thinking. Embrace automation as a means to enhance your trading capabilities, but remain vigilant and informed. In the ever-evolving landscape of global markets, the ability to adapt and learn continuously is your greatest asset. Sign up for the Fintech Bot Focus newsletter. Before you go, make sure you join the Fintech Bot Focus newsletter. You'll get updates on new bots and AI features, strategy breakdowns, my honest takes on what's working, early looks at new automated trading tools, and you can reply with video topics you want covered. The link is in the description. Join the community and stay ahead of the automation curve. Disclaimer: this video is for educational purposes only, not financial advice. Trading, especially automated trading, involves risk. Always trade at your own risk and test everything before going live.